Okay, I think we're live. Yes, we are. Hey guys, it's just gonna be a couple of more minutes before we start the call. Just waiting on a few more team members to join, and then we'll be on our way. Let me know if you can see my screen in the comments and any sort of questions or suggestions for what we should cover today at the end of the call. Also, let us know in the comments. We already have a list of topics that we want to go over today, but at the end of the call, if you guys have some additional questions or coins that you want us to look into, we'll leave some time for that as well. Okay, we'll just be a few more minutes and then we'll start. Hey, Brian, can you hear us?
Yep, I hear you loud and clear.
Okay. Okay, everything seems to be looking good on my end. Um, let's just give it a few more minutes for Max to join, and you can kind of already make your templates
Yeah,
and share the screen if you want.
you bet.
Okay, good. I think, what time is it on your end? For me, it's 4:01 p.m. Central Eastern Time. So is
Yeah, mine just turned to O2.
Okay, so we're fine, yeah, because on the call I see it being 3:59, so I'm not sure whether we're ahead of the schedule slightly or behind. Okay, I think we can just start with presenting. Before that, let me just make an introduction. So, hello everyone watching this and joining us or watching this after the fact. Welcome to This Week in Crypto. If this is your first time here, this is a weekly community panel where the Sentiment team and some of the community members gather around and we discuss the recent crypto market events. But we don't really do it from a technical analysis. We try and combine a variety of different sources of information when looking at the market, and this includes the on-chain activity of the coins as well as social media and development activity for the entire network. So if you haven't used Santiment before, I strongly suggest checking out sentiment.net. The link is going to be in the description of this video. In the past 3 years, we've developed dozens of tools, metrics, strategies, all with the purpose of helping you better understand the crypto market, understanding the context behind market moves, and the behavior of the biggest stakeholders of the market. So I suggest checking out sentiment.net and also joining our Discord, the link to which is also going to be in the description of this video. If you don't really want to wait until next week to talk about these things, we do discuss these types of events from a data-driven perspective on a daily basis on our Discord channel. So check it out. The link is going to be in the description of this video. Okay, without further ado, we are going to open it up with Brian. We've got a few topics that we want to cover today. We're going to start with the latest on Bitcoin because there's been some, increased chatter once again about Bitcoin ranging maybe finally coming to an end. Then we're going to talk a little bit about the Plus token moving their coins over 780,000 Ethereum in the last couple of days and how that's impacted the network and how that might impact the market. And then finally, we're going to end with a little bit of an overview on what's been going on with DeFi, as well as Compound in particular, probably one of the hottest DeFi projects at the moment. So without any further ado, Brian, I think you're already sharing your screen. Yes, you are. I'll hand it over to you.
Alrighty, thanks, Dino. So we have been seeing for quite some time now, about 5 to 6 weeks, a ranging pattern for Bitcoin where it is basically, it's a little tough to see behind these colors, so I'm going to highlight it really quick. Over on the right there, you can see that we basically crossed into the 9,000 range right around April 20th to 21st or so. And we've been bouncing back and forth between the 9 and 10K range ever since. We're currently sitting at the high 9100s now. And the reason I have all these other metrics in the background is to show what kind of divergences might be forming as Bitcoin is looking to make its next move. And we're looking for hints as to where things might jump next, whether it goes above 10K or below 8,500. We put out a poll yesterday and we have a pretty split crowd. I'm actually going to show it really quick. Right here. So our poll results are showing that the majority of people, by a slim margin, believe that Bitcoin will actually fall below 8,100 in the next week. A smaller amount believes that we're going to stay in the 9K range, and then the smallest amount actually believe we're going to break above 10.5K. Now, for those of you who've been tracking us for a while, we've been, making it known that the prices tend to go toward the spot where there is the least expected outcome in crypto. And right now, the least expected outcome, at least according to this small sample survey with 282 votes, is that we're actually going to break above 10,500. Doesn't mean that's going to happen, but take this for what you will. From a social volume and social expectation, this is a promising sign for the bulls because there's the smallest group actually believing that we're going to break up. Going back to this chart, as you can see the blue here, this is the social volume, the amount of actual total mentions of Bitcoin over time over the past year. As you can see last July, when we were coming off of that high of over 13K, that's when social volume was at its highest, understandably. After that, it kind of dropped down and it was in this lower range for quite some time until Black Thursday, of course, when we saw that huge social volume spike here. And as prices rose to about 10K, social volume jumped up and then has really started to trace back down despite prices mostly staying within that same range. So this is actually a good sign for the bulls because social volume dropping down as prices stay up usually means that the crowd is starting to lose interest, they're getting a bit impatient, and there's some stagnation happening. This is not really following that. So unlike social volume, what we want to see with daily active addresses and token circulation, which I'll get to in a second, is a rise as prices stay flat. And that's more or less what we're seeing. Over the past month, it's kind of flattened out. I'm going to just highlight Bitcoin here for a minute. You can see we've had a few really big spikes over the past week, which is a good sign. But overall, we've basically been in the same trend that we've been in since we hit that 9K range of about, I can highlight here, we'll take an average bar here. We'll call it about 1 million, right around 1 million daily active addresses for the past month. But it's still good that it's a lot higher than it was over the previous year here. And especially since Black Thursday, when daily active addresses kind of took a small drop, we have retained that same sort of zone that we've been in since we hit that 9K, and it's up from Black Thursday for sure. And now I can highlight Ethereum here for comparison. And Ethereum has really been exploding a lot more of a bullish pattern than Bitcoin because it's basically climbed consistently ever since Black Thursday. We saw its big drop right here. And I'm going to highlight Ethereum's price really quick just so we can see how it matched up. And I'm going to take off Bitcoin and take off social volume. You can see that, interestingly, as daily active addresses bottomed out, this is right when Ethereum's price bottomed out in late January, and then it started to explode. And this was likely due to some whale activity. I remember in late January, we had some major buys from the top holders that we track. And that caused some FOMO, caused some daily active addresses to pick up. Then, right when the Black Thursday instance happened, we saw a major spike in DAA, followed by an amazing surge here. So this is what we're looking for when we look at a range, which Ethereum has done a bit as well. It's kind of tracked between, we'll say 220 to 250, which I know is a bit of a big range, but that's kind of what it's been doing back and forth as Bitcoin has been stagnant and other altcoins might be a little more volatile. Ethereum is more so doing what Bitcoin is doing right now, but we're seeing a much higher rise here, which tells us that Ethereum's future in the next month or so is looking promising from this perspective. Now, if I go to daily circulation here really quick, we're first going to look at Bitcoin. And what daily circulation is essentially just unique tokens that are being moved over time. So it cancels out things like wash trading and repeat buys and sells at a micro level, and only looks at the amount of unique tokens being moved on a daily basis. And we're seeing that it's mostly flat ever since the new year. There have been a few outliers, a few rises here in late April and throughout May, and it's kind of retraced just slightly. But I would call this pretty flat looking at the noise here. And then if we look at Ethereum, so we see this giant spike here, and I noticed this. I want to see a few more days elapse, but obviously good sign when we're seeing the last 3 to 4 days with this massive spike here. But this has been happening for actually a lot of altcoins, and I mostly am going to pay attention to this right now because on such a short-term scale for this and other alts, it's a bit interesting right now, and it could be DeFi related. We could get into that a little bit in the later part of the call, but mostly we're still seeing a growth despite that. So this is just since the beginning of the year. We're clearly at a higher level than we were back in January, and definitely bigger spikes going on here in June. And if this continues, we can expect an explosion in Ethereum, in my opinion. And then on the NVT side, so this is just our model here. Actually see what the divergence is between the amount of NVT, which is the market cap divided by the amount of token circulation, which we just looked at, and then uses trend lines over time to adjust for the larger amount of a gap between the market cap and the token circulation. And we're seeing that Bitcoin is actually kind of falling off because as we looked at, daily circulation has been about the same since the beginning of the year. And as prices rise, we would need to see more and more token circulation, which we aren't really seeing yet. And that's why we're seeing our first bearish bar for the month of June that we have seen since January. So it's been 5 months. We're back in the red right now. We'll see how the month closes off. But this is a good sign for the bears. If they're thinking that prices are going to go down to the low 8,000s or below, this is kind of what they want to see. So we're seeing a bit of contradictory data between daily active addresses and NVT and a few other things right now. And Gary's going to go into it in just a moment. But before I give him the floor, I just want to also show that Ethereum, as is supported with the daily circulation, we're seeing some very low hash marks, which are good for the bulls because it's showing that we're getting a very high amount of token circulation the past few days. And that has been enough to pull Ethereum into the green. So this is actually quite rare. We see a very contrasting difference between Bitcoin and Ethereum right now. And Ethereum's circulation seems to be exploding at the moment. Like I said, though, I want to see this going on for at least a week before I pass it off as anything more than an anomaly. So if you guys would like access to this model, please let me know. Happy to give it to you. I was going to show DAA versus price. I'll just say for a quick 30 seconds that Bitcoin is looking pretty much normal. We have not seen any signals of outlier forms in either direction lately for going on about a month or so. So nothing going here. And then for Ethereum, the 2 years, same thing. Even for about 2 months now, we've really gotten no divergences in either direction. So this is just measuring whether there's an extreme outlier going on with daily active addresses. And I would guess that Ethereum, if it continues that uptrend like we showed back here, we'll probably start to see a bullish divergence show soon unless price starts to follow it up. So all that being said, I am going to now give it over to Gary so he can recap what was a fantastic Bitcoin article yesterday that he released about the ranging that's currently happening and the arguments for both the bull and the bear side.
Thanks, Brian. Yeah, Gary, if you want to go ahead
Thank
and
you.
share your screen, and yeah, continue with the topic on. We're still, guys, we're talking about Bitcoin, and afterwards we will be kind of covering this massive spike in on-chain transaction volume for Ethereum. But if you have questions or suggestions on what we should cover afterwards, please let us know in the comments. We're going to leave a little bit of time in the end to go over any requests for analysis in terms of on-chain and social and development activity for any coin that we have in our database. So yeah, in the meantime, Gary, go ahead and tell us what you kind of found analyzing Bitcoin yesterday.
Yeah, thanks, Dino. Thanks, Brian. So on a larger time scale, we're now looking at daily active addresses for Bitcoin. We can notice that the current today's levels of DIA for BTC is actually the same as BTC has had during its last summer pump, and the same time during great 3 years ago pump. So it's quite bullish. Another sign is quite a negative sentiment detected on Twitter towards Bitcoin. It's very deep in bearish sentiment area, which is unobvious but bullish again for BTC. On the other part, did anyone look into development activity of Bitcoin? It actually is very close to its all-time high since inception.
Yeah, that's
Which
quite
fundamentally
interesting,
is,
right? I don't know. I haven't really seen any news about that. Might be just some, bug fixing by Bitcoin core developers. I don't know. I'm not expecting any like major announcement as far as the underlying network's concerned, but it's interesting to see for sure.
Certainly a good sign.
yeah. Another sign, which may be a worrying sign, is declining amounts of percentage of active bitcoins on a network. It's declining. It's actually declining for last months, and last time the similar pattern happened on Bitcoin network. It ended up with a pump. But on another time, we've seen this pattern. It ended up with a sharper drop. So it may work both ways. What else? No one is talking about buying the dip, actually. The social volume of related talks to the buying dips is quite nominal, quite minimal, and it actually it maybe makes sense to buy the dip if it happens. That's it.
Right, right. Yeah, I mean, in general, I think it's kind of the on-chain and social data seems to be a bit ambivalent about BTC. Like the social data is to me probably the most optimistic signal for now because as Gary shared a little while ago, it's very bearish at the moment, which is a good sign for Bitcoin. Because if you look at historical, and we can share it once again, if you look at the historical kind of trends for Bitcoin sentiment on crypto social media, when it's hugely bullish, that's usually the time when you don't really want to be on the market. So, Gary, if you kind of extend that time range to maybe the beginning of 2019, yeah, people will be able to see that most of these big tops for BTC actually came at a very bullish, predominantly bullish atmosphere, and most of the rallies came from a relatively bearish sentiment of the crowd. Yeah, there you go. So 2019, both of those tops were they equated with a high spike in bullish sentiment. Now this is where the thing that Gary is showing right now, this first big spike in bullish sentiment. This is where I said a few weeks ago, I think we are again. So you can see that in May of 2019 there was this big spike in bullish sentiment, and then it led to a short-term correction for Bitcoin. We went into a bearish territory, and then after a couple of weeks, we actually, from that bearish territory, we were able to bounce back and move over, I think about 13K, right? So this is, for me at least, probably the most promising sign for Bitcoin at the moment, along with the fact that Bitcoin's MVRV long-short difference is still in the positive territory, which indicates that long-term holders are currently, in higher profits than short-term holders, which has historically also been a sign of a potential bull market or a bull cycle for BTC. So keep an eye on this metric in particular, guys, in the next couple of days. And if you would like access to this metric in particular, all you need to do is become a Sandbase Pro subscriber. You can get a 14-day trial by creating a free account on app.santiment.net, and you'll be able to get all of the sentiment metrics as well as the on-chain and development activity metrics that Gary has just shown. So before we kind of go into Ethereum, I think, Max, you wanted to mention a few sort of metrics or correlations between traditional markets and Bitcoin that you've been tracking in the last couple of days. So if you want to share a screen,
just shortly,
yeah,
just shortly.
Sure.
I will keep it short. When we're growing, this is where kind of deviating.
Sometimes, are you sharing your screen? I'm not seeing it.
No. I will just say a few words.
Okay.
Way to keep attention. Yeah. Once we are growing, then it can be Bitcoin pushing first, or altcoins pushing first, or S&P, or whatever, or stocks. At the moment, nothing is really pushing hard. Well, the only exception was compound distribution, nice pump, Coinbase listing. But generally, market is or macroeconomic situation, people are kind of afraid of second wave. You can see these concerns are growing, so money is waiting. But don't get scared. If we're, from financial point of view, lucky, yeah, not as a humans, it's not being lucky have second wave. But if financial point of view, we're lucky to really hit the second wave of fear or concerns, and market does crash down and gives you an opportunity. Don't get scared. Don't get scared. Use it as an opportunity. I think it will be a good chance. At the moment, yeah. Nothing is growing, everything is stabilized. And if market is not growing, well, it goes in another direction, especially in crypto, like 2 weeks, no growth. Well, it's very likely it wants to revisit some lows, collect some stop losses. And a second, from microeconomic point from crypto, there were at least 2 weeks ago very high hopes for Bitcoin and Ethereum keep growing and break 11,000. And there have been a lot of options bet placed on it. There is data like on Deribit, I think, where it mostly shows a huge amount of calls, very few puts. So, and they expire today. Mm-hmm. Ideally, we start growing somewhere weekend, maybe next Monday. And if we're lucky, as I say, we have some bad news. Suddenly things are crashing, and it will be good buying opportunity. Yeah. But yeah, that's it. I will not mention. One thing which is when we were discussing preparing the call, there is a famous Wirecard. Okay, this one I will share.
Go ahead.
Because this is an interesting. This is an interesting chart to share when people say crypto is scam. Now you should look at this. Yeah, you see my screen, yeah?
Yep.
Yeah, this is a Wirecard, yeah? Wirecard, yeah. Which suddenly they found out they don't have $2 billion euro or dollars. It was supposed to be in the books, but at the end, the money was not there. That's a kind of crazy thing. And now it's all about borrowing, lending, debt market. And in the crypto, you don't have this. Yeah? If you make collateral and you issue or you create for yourself debt, well, then everyone is clear how much collateral you have, and systems are working. Yeah, they could be liquidating you on not in the best time, but it's transparent by default. Capitalization, of the market or capitalization of your debt collateral, it's clear. Yeah, but one thing important: we only can talk about Bitcoin, Ethereum as a transparent and decentralized collateral. Yeah, I'm pretty sure we will see very soon, and we're seeing already, BAT, 0x, and many other tokens will be used as a collateral. They're not as transparent, they're not as decentralized, and will get some quite big troubles somewhere along the way. I don't know, most likely not now, but it will happen. So something will go wrong, something will crash. But it doesn't matter. Actually, if it will crash, most likely it will be somewhere in the bear market and it will mark the bottom, as always. Bad news comes to the bottom. The thing is that Bitcoin is almost perfect decentralized collateral. Yeah, no one can really like print more or pretend he has, but he doesn't have. Well, if he doesn't have, you put collateral to liquidate it. That's it. Market will absorb it.
Right.
So we should keep an eye on it. This example of 2 billion, suddenly we had money on accounts, but it doesn't have. This is how it doesn't work on crypto. If you have it, well, it is in the system. If suddenly you over leverage, well, it's just liquidated. That's it. So generally, crypto is. I'm even more bullish after this example. Like, wow, just need to find the good places when you enter the market.
Yeah, I think a lot of people are. I've heard or I've seen a lot of bullish calls for Bitcoin because of this wirecard. For like, how do you just lose $2 billion?
Yes, exactly. I don't know. Like in the way, well,
Yeah.
it's actually very, very. It's criminal. Yeah, I don't know. The poor guys, they will have to serve. Well, we know it from ISO time. Okay, well, we know a lot of examples like this, but we saw it is typical for crypto. No, in normal, so regulated, so many rules and laws. Doesn't matter. 2 billion. Where they? Oh, we don't have it. Anyway, so now it's. Like I remember, was a very nice tweet from Vitalik saying, "Well, we wanted to bring volatility and or transparency of crypto to the stock level. Now look what happened.
All right.
It's the other way around. As they brought it to the crypto level."
Right.
Yeah. Okay, that's it. Buy the dips. Yeah.
Buy the dips. I think this is actually a pretty good segue into what I was going to show anyway. Wait, where is my? Oh, right. Present screen. Just talking about the transparent nature of just cryptocurrencies in general, I wanted to talk about this massive spike that Brian just mentioned in Ethereum's transaction volume. So we made a video about this yesterday. I wanted to briefly also go over it today. You can find the full video somewhere on our channel. It's probably the one before this one that we published. So if we go here all the way to, you can see my screen, by the way, right?
Yes.
Looks good. Yep.
Okay, good.
So nice dark, your typical dark.
Yeah,
nice.
I'm digging the dark. I mean,
Yes.
actually, we can light it up.
No, it looks good. No,
Okay.
I think it's good. Yeah.
Yeah. So I made a video yesterday about this massive spike because you can't really see it here, but it's about 4 million Ethereum being transacted on the chain. So this is Ethereum's on-chain transaction volume, which means here we're tracking the total amount of coins that have been included in all of the network transactions on that date. So about 4 million Ethereum have exchanged addresses yesterday. And this is the biggest spike since the Black Thursday dump by far. You can see that we've pretty much had this sort of consolidation period in transaction volume until this massive spike. And so I also looked at Ethereum's age consumed, which tracks the movement of old coins or coins that have not moved for a long amount of time. And there was a correlating spike in Ethereum's age consumed. This indicated to me that there was also probably a substantial amount of, or possibly a substantial amount of, coins that have been dormant for a while that have started moving once again. And usually when you see these spikes, it can often correlate with local tops or local bottoms. As you can see, spikes in token age consumed here, perfectly correlating with the tops, here at the bottom, and so forth. So, token age consumed and spikes in token age consumed are usually very effective volatility indicators. They're not necessarily telling you we're about to pump or we're about to dump. What they are telling you is that long-term holders seem to be making moves, and they usually don't make moves until they have analyzed the market very well, until they maybe even have some insider information. So it pays to know what long-term holders are doing. So I was wondering, what actually happened? Why this sudden massive spike in Ethereum's transaction volume? And I wanted to show you how you can kind of do this analysis by yourself through our system. So if you don't have access to data.santiment.net or SandData, the link is going to be in the description of this video. One of the more powerful metrics that we have here, or dashboards that we have in SandData, are these top transfers dashboards. So I wanted to see what were the biggest transactions on Ethereum in the past couple of days. So, I just selected the top transfers for Ethereum, took the last 2 days. Actually, maybe now we should take the last 3 days. Let's see. Last 2 days. Yeah, let's take last week. Yeah, because this is the major transaction, the one that happened about maybe 48, 49 hours ago. So here our system, when you select the time frame, our system immediately filters out the biggest transactions for that particular coin. Now here we're looking at the biggest Ethereum related transactions, and obviously this one transaction, these two are interconnected, but they count as two in our transaction volume. This is probably the biggest culprit why the spike in the Ethereum's on-chain transaction volume. So if we click here through to Etherscan details, it becomes very obvious why this is. Obviously, the Plus token coins, or the Plus token address, which has been inactive for about 200 days at this point, has started moving pretty much all of their Ethereum, about $180 million worth of Ethereum, to a bunch of addresses. Now, I'm not going to go through the entire transactional flow here, but you can see that they first move it to this interim address, and then I think they're moving it through some kind of a mixer. It's going through thousands of different addresses in smaller chunks. It definitely looks like they're trying to, launder the coins and hope, they're trying to make their way to exchanges. Now, as far as I've been able to tell so far, they haven't been successful in actually moving their coins to exchanges at the moment. However, this was still a pretty massive move, and a lot of people seem to have been spooked by it. And we can actually see this in Ethereum sentiment on social media. I checked this yesterday, and there was a massive dip in Ethereum social sentiment. We'll be able to hopefully see it right now, where pretty much until the Plus token move, we were actually in a very bullish territory as far as Ethereum related sentiment is concerned. I think this is mostly because of the outbreak of all of these DeFi coins, which, a lot of people think or hope that these gains are essentially going to trickle down to Ethereum, because most of these platforms are, at the end of the day, living on the Ethereum blockchain. So here I'm going to look at the sentiment for Ethereum on the crypto specific Twitter channels. Now, let me just scroll all the way down to this particular metric called the weighted social sentiment. And what we've already shown it here for Bitcoin, this particular metric. What it does, just as a brief reminder, is that it looks at the average sentiment for a specific coin on crypto social media. So if we see these massive spikes, that means that the general sentiment of the crowd is very bullish. If we see these dips, or dips below zero, that means that the average crowd sentiment is very bearish. Now, as you can see, in the past couple of days to weeks, we had this huge spike in bullishness towards Ethereum on Twitter. And I honestly think that the biggest reason is DeFi season, so to speak. And then also I've seen some guys, TA analysts, talk about how this, consolidation period is probably going to be beneficial for Ethereum midterm. So these kind of, discussion points have contributed, I believe, to this massive bullishness in Ethereum. And this is not a good place for Ethereum to be. Just take a look at a couple of different previous tops for Ethereum. We got a huge spike here before the correction. We've got a huge bullishness spike here before the correction. We have a massive bullish spike here before the consolidation, here as well, and here during the even July 2018 top. Here also before the correction in January of 2019. So massively bullish sentiment is not where where Ethereum wants to be. And so after the Plus token started moving their coins, let me zoom in a bit so you can see. In the past couple of days, we've seen this bullish sentiment kind of start declining back to a sort of ambivalent neutral territory, which is good. Like ideally, I would still want the sentiment for Ethereum to go even more below, somewhere in the bearish territory, so we can kind of be hopeful that the price can grow from a social data standpoint. But anyway, you can see kind of, I think, how the plus token impacted the move, impacted the general vibe of the market. Now, this is not the only impact that the plus token had on the market. I wanted to also look at a few different metrics for Ethereum as far as what's been going on with its on-chain data related to exchange activity, because in the past couple of days, now obviously I'm not entirely sure whether this is only connected to the plus token move or if this is just a general market trend, but we have been seeing a spike in Ethereum being located on centralized exchange wallets, which does kind of point to a rising sell pressure for Ethereum. Let me scroll all the way down here as soon as it loads. By the way, sorry for the long load. This is not the platform itself. It's my Wi-Fi most probably. And also, like when I stream, because I'm the one streaming, the OBS kind of takes a lot of my bandwidth. So let's look at the coin supply on exchanges for Ethereum. And this is what I wanted to show. So actually, this particular dip, I was trying to figure out exactly where it originated. I'll talk about that in a minute. But before that, let's just leave that out because it's not connected. And you'll see. Yeah, so you'll see that since the consolidation started, we've kind of been seeing the supply of Ethereum on exchanges start dropping. And then in the past couple of days, pretty much alongside this rise in Ethereum above 240, we saw an uptick in the amount of coins being held, Ethereum coins being held on exchanges. This is about 240,000 Ethereum being moved to exchanges in the past couple of days. Some of them being moved, like starting here, this is being moved after the plus token news broke, but even before that, we saw a few 100,000 Ethereum being moved to exchanges. So this is, indicative of a rising sell pressure. And when you combine that with a extremely bullish sentiment, I think that Ethereum was already kind of poised for correction even before this move, which a lot of people kind of think is because Bitcoin dumped in particular and not because anything that happened with Ethereum. But I think, there was a lot of bearish setup for Ethereum before this dump. And it looked like a self-fulfilling prophecy, right? And then at the same time, another sort of bearish undertone that I saw for Ethereum before this dump was what their whales have been doing. So pretty much ever since the consolidation started, the biggest Ethereum whales haven't been kind of, they've kind of been pretty quiet. They've accumulated a little bit more Ethereum than general, but overall, they haven't really done all that much. They've kind of been sitting on their bags, and you'll be able to see that hopefully right now. Yep, there we go. So currently here we're looking at the combined balance of the top 100 addresses holding Ethereum. And I'm going to plot that against the price of Ethereum, and I'm going to select year-to-date view. There we go. So this is the part that I wanted to show you guys. So the first interesting thing here is that the last time that whales really started moving their coins from their bags came right at the start of Ethereum's consolidation. And if you look at the biggest exchange wallets at the time, their balance started rising very heavily at around the same time. So this to me seems like it points to Ethereum whales moving their coins to exchanges and kind of contributing to the end of Ethereum's rally. Now, in the past couple of days, essentially since Monday here, we saw a massive dip, and it's continuing to this day, a massive dip in the holdings of the biggest Ethereum whales. Now, this is also correlating with a spike that I showed you just a minute ago in the amount of supply of Ethereum on exchanges. So combine those two things together, and the extremely bullish sentiment that was happening for Ethereum a couple of days ago, it seemed to me like a very clear setup that we're headed for a minor correction. Now, I'm not saying that this is going to keep happening, but for the time being, I think there was plenty of evidence that we were kind of moving to a bearish territory for Ethereum. Now, in the past 24 hours alone, we've also seen another massive move. So it went from pretty much 22 million to 21.2 million Ethereum. So about 800,000 Ethereum, maybe 750,000 Ethereum have been moved from these large holders, to some other addresses. Now, I'm not sure if this is actually bearish, because if we go back to Ethereum's exchange metrics, you can see a massive dip today in Ethereum's exchange balance, which to me says that these whales aren't really sending or moving their bags to exchanges this time around. They're moving it somewhere else. Let me just show you once again that massive dip that we saw today in the amount of Ethereum being held on exchanges. So here, exchanges. And I was able to track where these coins went. They're just currently chilling at some random addresses. Okay, once again, last 3 months. Oh, this is miner's balance. One sec. Coin supply and exchanges. Come on. Yeah, so this was another massive sort of downtrend here for the amount of coins being held on exchanges. It went from 18.2 million to now, let's see, it's I think 17 point something. Can I try? 17 points, what was it? 17.16. Okay, good. So about more than a million Ethereum being moved away from exchanges. And when I was looking at today's top transactions for Ethereum, I saw a bunch of transactions from Bitrex's wallet to just random addresses. They're currently not moving anywhere to any sort of DeFi project. They're just kind of moving away from exchanges and sitting there. Now, I'm not sure exactly what contributed to this latest dip, but it's definitely something to keep an eye on. Usually when we see a declining trend in terms of the amount of Ethereum being held on exchanges, it can correlate with a rising Ethereum price, just because of it, the available supply of Ethereum has kind of collapsed a little bit here. And you can see, like, for example, if we zoom out a bit, you can see that the amount of Ethereum being held on exchanges does tend to kind of decline into a price rally and then tends to rise before the correction. So this move, if it is legit and if it is just people kind of being okay with their current bags for Ethereum and not really wanting to trade them, should be a generally positive sign for Ethereum's midterm action. And then finally, I wanted to show, as Brian has already kind of mentioned, that even despite these recent moves, which I think are mostly just one-offs or black swans, like the Plus token move, which kind of disrupted the entire market, in general, I think the Ethereum network is doing pretty well. Like currently, the amount of addresses that are interacting with Ethereum on a daily basis, they're at a 1-year high. They're essentially almost at a level. Let me try. Since January 2019, so you can kind of see where we are at the moment. They're essentially now almost at the biggest level or the biggest spike in Ethereum's daily active addresses in 2019. And it's been on a 6-month uptrend, essentially ever since early February, that we saw the actual amount of addresses interacting with Ethereum spiking. The actual transaction volume, though, has remained relatively modest or relatively normal, so to speak, if you discount this massive spike, which is due to Plus token, Plus token moving their coins. So for now, I would say that there is probably enough fundamental support for Ethereum to grow larger. And the fact that we're now seeing the sentiment kind of finally going away from this extremely bullish, atmosphere and mood, which was probably due to DeFi coins in particular, now it's kind of trending downwards to a more rational or ambivalent mood about Ethereum. I think these are kind of pointing that to a fairly optimistic short or midterm outlook for Ethereum. So these are some of the things that I wanted just to show how we saw the market and the network react to this massive spike in Plus token that Plus token caused, and where I think Ethereum might be going next. So yeah, that's going to be it, I think, for Ethereum, guys. We're going to have a short section about DeFi as well that I think, Brian, you wanted to open us up with.
Yeah, you bet. Let me get my screen up again here.
Okay.
And as Brian opened his screen, let me one thing it show up on our question section in the stream, and I think it's a good idea. We could talk with our data scientist. It's not only plus token. Someone mentioned that there are 4 more Ponzi scams which are generating all this activity. So I would really like to extract and see how much of the gas paid, daily active addresses, or value transacted on Ethereum is because of this. Because in general they have to pay. It's not like free like on EOS or Tron, like it's almost for free there. On EOS free. Of course you can do whatever you want. And here you have to pay. Yeah, and it's kind of very competitive prices. It can be at times very high. So I think Dina will ask some of our devs to get all these Ponzi's or whatever involved, and see how much activity and how much as I pay. So it must be very profitable for them. So they pay, and the fact that it's very profitable, it really means that there is a lot of risk on mode in the markets in general.
Right.
Participate in Ponzi, well, you should be thinking that there will be someone else participating in it. Yeah. Anyway, it's just a side note. I was reading the questions.
No, it's a good point. And actually, I think this particular spike, this one here in the amount of daily active addresses for Ethereum, this might have to do with Plus Token kind of moving their coins through thousands of addresses. I think it was 5,000 or 6,000 the last time that I checked. Because I agree that a bunch of these Ponzi schemes are kind of just a part of the network at the moment. But in general, the trend to me is fairly optimistic, right? It went from the lowest part of 2020 so far was just 159,000 addresses interacting with Ethereum to now a high of 441,000. Some of these, yes, they will be bots, they will be Ponzi related, but for a lot of these, I think it's legit, especially because it kind of makes sense with the current kind of undertones of the market and the DeFi craze that we've been seeing going around lately. I think it's probably, to me, I think it's probably legit for the most part. But we can try with our data scientists to figure out if we can kind of filter out those specific addresses and their impact on the network. I think that would be a good idea. And yeah, anyway, guys, we're going to talk a little bit now about DeFi tokens that we've seen, and something interesting that we've seen happening with them in the past couple of days. But if you have any questions or suggestions of what we should cover before we go offline for the day, let us know in the comments, and then we'll get to that after Brian's exposition here. So Brian, if you want to share your screen, I'll stop presenting mine and let you have the floor again.
Yep, sounds good. All right, so what we're looking at here is the token age consumed model on Sandsheets that we have that basically tracks about 10 different projects at a time and marks their biggest five spikes of the past 90 days or the full calendar year. But for today's purposes, we're going to look at the past 90 days, and we're looking at the largest spikes that we've seen. And you guys may notice a trend here. We're getting a ton of token age consumed spikes in the most recent month or so. So right around here, we started to see a big explosion in tokens being moved. For those of you who don't know, average token age consumed is the amount of tokens changing addresses on a certain date multiplied by the number of days since they last moved. And we're seeing a lot of older tokens here being moved in large quantities. We saw here, this was a big spike in Engine Coin over a 3-day span in late May. We saw the largest 0x token age consumed of all time here on the 21st, with another big spike coming up the following day. And most recently, we've seen some big spikes in Augur, which began on June 16th. And over the past 2 days, two full days of the 24th and the 25th, we've seen 2 more big spikes. And if we look at it here on Sand Data, we can see how big these really were. And I'll even go back to about 2 years. And we'll see that it was the largest we had since late May. And obviously Augur, as many of you know, has been one of the biggest climbers since Black Thursday here. I don't know the exact percentage, but I know it's close to about 120% since Black Thursday. And generally when we see these spikes, it's a sign of prices turning. And considering the fact that we have been on such a climb, this token age consumed was likely a profit take of some type that has caused the retracement. And it's a little hard to see. Let me see if I can go just to past 30 days to zoom in on that. Yeah, so we saw a big trio of spikes here that all correlated with the top, and the price has now retraced pretty significantly. And until we see another token age consumed spike that would signify another reversal of price, we can consider Augur sort of on the way down in terms of this metric. But I'm also going to show that on our top holders metric here, if you look at the sort of teal bluish green color here, this is Augur's cumulative change of the total supply by the top 10 holders over the past 30 days. So in other words, this is the amount of percentage of the supply for about 15 different projects, and we've highlighted 2 here, that each project has gained or lost within those top 10 respective addresses. So for rep, we are seeing that since about June 6th, so we'll call it 3 weeks ago, we have seen those top 10 addresses gain about, if I can highlight it, we'll call it, yeah, here we go, about 5.02% gain, which is massive. And if we look at it from this perspective, we'll see Augur right here. It's showing that over the past week, or past 4 weeks, that is, it's gone from 34% of the total supply from these top 10 addresses to 39.4, which is very, very large. We'll also see another outlier here of basic attention token, which in a single week has gone from 34.1% of the total supply by these top 10 addresses to 40.1. So that's over a 6% gain just over the past week. And generally when we see these huge buys by the top 10 addresses, it's a sign that prices will soon be going up. So for Augur's case, this sort of contradicts what we just saw with the token age consumed spike. But if we look at the dates, they mostly happened, you know, between the 16th and the 20th, and the accumulation has really ramped up over the past week. If I go back to this, yeah, here we go. If we go back to just the past week, we've seen even more buys as the price retraced a little. So the whales are looking at this as an opportunity for kind of a bounce because of this kind of drop here. It might be a sign that they're accumulating more on the way down. And then going back to this chart one more time, we can take a look at what basic attention token is doing. Just as this chart reflects, where we saw a huge jump in the past week in their total supply holdings among those top 10 addresses, we're seeing it reflected here, particularly on the 20th and the 21st. So if I go over to basic attention token, and yeah, so we saw a huge token age consumed spike right when this big buy happened between the 20th and the 21st. And this almost certainly was correlated with this jump right here. So what I'm seeing is a lot of accumulation from the top 10 addresses right now. We can even look at the top 1 address, and we're not seeing much for basic attention token. Ignore this bold one, this was for Ren, but this teal one right here, this shows that most of that accumulation is from the actual top holder for Augur. And that's pretty significant too, because obviously the top holder is going to be the one that has the most say and the most weight in terms of where prices are going to be heading next. Yeah, and I also highlighted it here on Sandbase. So anyone who has just a simple Sandbase Pro subscription will be able to see this and understand that the top addresses for percent of total supply are really jumping up. We could even look at it in a more granular way and say, search is not currently working, but we can look at it from this perspective. Top exchanges, yeah. So we had a huge jump in top exchange addresses moving right around the beginning of June, and then non-exchanges, it's a bit more gradual. So the non-exchanges are going pretty much along with what we're seeing with the total cumulative supply, but there was one singular jump here in the top exchange addresses that happened in the early part of the month. So yeah, we really put a lot of credence in these two models. The token age consumed model, which is showing that right around when Bitcoin started to top around last month, we saw a lot of altcoins starting to make big moves with their older tokens that have been stagnant in one address for a long period of time. And then also in this top holders metric here, all three of these tabs are really important: the top holder, the top 10, and top 100. And obviously you can see they tell drastically different stories, but all are important in their own way. And I really would recommend that anyone with the subscription checks these out every couple days to see when big moves are happening next, because clearly BAT and REP, top 10 holders, are making some big accumulation moves right now that are probably foreshadowing some decouplings in the near future for these two respective assets. Anything that anyone wants to add while I have my screen shared?
No, it's just quite interesting what you've been finding there with the templates. I've seen a very sort of similar pattern with pretty much all of the ERC20 coins that have currently kind of that they have their markets on Compound. So actually, if I can share my screen just for 1 sec,
Yep.
because it dovetails into what you were just saying quite nicely. Let me share my entire screen. Okay, and let's see, where am I? Oh, 1 sec. Yeah, there we go.
Oh, and one of the commenters mentioned that DeFi farming is really big for basic attention token right
Yes.
now. So there might be some likely correlation there.
So
So good point by Donut.
Yeah, I was actually gonna point to, well, actually, let's point to Augur first, because you mentioned it already. Let me full screen my screen. Okay, so when talking about Augur, I noticed that the Augur supply on exchanges has kind of been dramatically dropping. Let's take the last 6 months. Yeah, so you'll see this. Let's see, what is this 6 months? No, it's, yeah. So this was the first wave, and then in the past couple of days, I've noticed another sort of wave of withdrawals from exchanges, of massive withdrawals of Augur from exchanges. So this is Augur, and then we've got 0x, which also has their own market on Compound, and a few other lending protocols. Let's look at 0x's supply on exchange. Same thing. All of a sudden, you got this massive drop in 0x's supply on exchanges. And then finally, as you just mentioned, BAT has a very similar pattern that I've found. Yeah. Okay. So what the heck is going on, right? There's this massive drops. People are withdrawing all of these coins en masse from known exchange wallets. Where are they going? Okay. So what I did, I wanted to look at exactly where these transactions were headed, or who was the recipient. And it's actually quite easy to do, once again, through our top transfer dashboard. So I already got basic attention token here. Let's take maybe the last 2 days. And yeah, and so let's look at, actually I need to out full screen my screen here. So yeah, I was just going to show a few of the biggest transactions and show you that they are in fact related to Compound. Pretty much all of these, I think. If we go one by one, I don't want to spend too much time on it. Yep, borrowing, repaying, supplying to Compound. It's the same thing with Augur, and it's the same thing with 0x. If we go back to Augur, last 2 days. Let's look at its biggest transactions. I think maybe this first one isn't, but the others are. Let me see. No, even the first one, supplying 750,000 rep or $11.8 million worth of rep to Compound. And then once again, this one, same thing, supplying $4.5 million worth of rep to Compound. So if you then go back and look at where these addresses, originated their tokens from, a lot of them you'll find have been withdrawn from exchanges and gone to Compound. So it seems like yield farming is still very much a thing. All of the coins that have their ERC20 coins that have their markets on Compound currently, I've been seeing a lot of withdrawals from exchanges. And probably just people trying to do something more with their coins rather than just letting them sit on exchanges and not accrue any value. They don't want to sell them just yet. Especially like I think a lot of people don't want to sell their DeFi related coins into a current market sentiment, which is all about DeFi and DeFi protocols. So I think it's just people finding a new use case, if you want to call it that, for these coins and moving them to the most popular markets. So this should bode well not just for the price of these coins, but probably for the price of comp as well. It has been kind of on a decline in the past couple of days, but that's to be expected. Like it pretty much did like what 500% increase in the days
Yeah,
since
it was between 500 and 600%. It was pretty massive. So we're
yeah,
naturally going to see some retracement there.
obviously, yeah, but the hype is real. The hype definitely seems to be real. We see some of the larger players kind of moving their coins into Compound more and more, and I wouldn't even be surprised if some of the top holders that we're showing today, as far as non-exchange holders, are now actually Compound addresses, just holding these massive amounts of Augur, BAT, 0x, and so forth. So
Yeah. And regarding 0x, by the way, Dino, we're seeing some decoupling. Maybe you can show really quick the on Sandbase just a comparison of ZRX versus Bitcoin, because we saw, as Dino said, we're seeing a lot of tokens being moved off of addresses right now, likely due to comp and DeFi related factors. And we also saw, as I showed about 10 minutes ago, the largest token age consumed spike it's had of all time. And generally when that happens, there's a decoupling. And you mentioned in an article a couple days ago that there could be this kind of movement after a few days regarding those kinds of large token age consumed spikes. So we can show it here just on a 24-hour scale, which I'm seeing on TradingView right now. It's starting to put up a pretty massive spike as all of crypto is recovering just in the last couple of minutes after it was retracing over the last couple hours. But 0x especially is moving higher against Bitcoin.
So let's look at it here, compare it to the price of Bitcoin, and let's
you can just go last 24.
Sure, let's lose it.
Or last week.
Okay, yeah. So this is the last month, and you can see pretty much, going hand in hand. Actually, let's zoom in just so you can see this last move that Brian's been talking about. Yeah. So this is Bitcoin, and this is 0x.
So I would expect this to continue, actually. I think with the token age consumed spikes that it just had, it's 0x is already one of the more volatile ERC20s within the top 100. When it makes moves, as many of you know, it makes a very large move. And I think this could be a very good buy opportunity myself. It's obviously not investment advice. But when we see that large down move, like we had back on the 24th, and a token age consumed spike correlates with it basically the day before, that's going to be a sign that there's going to be a price reversal. And when the price trend was moving down at the time that it happened, that's a sign that prices will reflect upwards as a result of it, especially with such large token age consumed spikes happening versus the mean. So I just want to show that off and point out that this is kind of what a decoupling looks like. It looks sort of like this, where you see an initial spike, then a little bit of a retrace as the market isn't sure what to do with that, or they want to take profit, followed by a little bit of extra volume, which I think is going to continue throughout the day. Now, we may see Bitcoin fall below 9K and ZRX's rally might be stomped right off the bat. But if Bitcoin can retain this 9K to 93K, 9.3K range, I think ZRX might be one to watch carefully and track things like social volume, which we didn't touch on today, and other things like daily active addresses and token circulation.
Right, right. Yeah, makes sense. I think, yeah, so we published an article on 0x, was it, yeah, 1 day ago, where I basically went to, you can find this on insights.santiment.net, and you'll be able to see. So we actually made a pretty bullish case about it, even though, a lot of these moves have been compound related rather than anything in terms of like general network adoption of 0x. It's actually just, people trying to make more from what they already have on the liquidity markets. I think in general the setup was pretty bullish for 0x, and it's yeah. If you can see, for example, 0x whales adding 13 million in the past couple of days. The MVRV for 0x being very low, meaning that people are currently, or short-term holders are currently, not really in a lot of profit. So there's not a whole lot of incentive to sell. They're kind of breaking even at 1.03, meaning they're just currently at like 3%, ROI on their initial investment. So there was a lot of kind of signs pointing that 0x might break above. So it seems like it has in the past couple of hours. Now we're retracing a little bit, but in general, yeah, the DeFi season is definitely here, and anything that's connected to decentralized and lending protocols might be fair game. So yeah, okay. I think unless we have other questions from the audience, I think we're gonna call it a day. Just because it's already been more than an hour. So yeah, we can continue this discussion over on our Discord channel. The link is going to be in the description of this video. Um, Other than that, guys, I think we're good to go for today. Brian, is there any other questions that you wanted to address, or are we pretty much done?
Donut just mentioned that he wanted to know about Ren, and I'll just answer him on audio and tell him that the top holder accumulation that was going on 2 weeks ago has reversed in the past week, and that the same top holders have been shedding a lot of what they accumulated 2 weeks ago over the past week.
Mm-hmm.
Yeah, you're welcome to illustrate it really quick. I just wanted to let him know that is another significant ERC20 that the top holder metric has sort of shown an interesting illustration on.
Let me see. Yeah, the supply on exchanges, once again, very similar to what we've already been seeing, kind of declining. I would not be surprised if this is just, people maybe even putting their Ren coins towards running dark nodes or something like that. This looks
Yeah,
pretty
look at that leading indicator on there too. It's acting very inversely to each other.
Yeah. It's usually what you see when you see this massive dips in coin supply. If it's legit, if it's not, just a spoof of some kind, or some Ponzi scheme, you usually, can see as the available supply of a coin on exchanges begins to drop, you can see the price very often tends to rise, because if the demand, assuming that demand is the same, this reduced or shrunk supply can kind of lead to a short-term rally as well. So Ren is still looking fairly okay. The daily active addresses are very high at the moment. This is not necessarily a great sign for it. I mean, it is in general if we stay at these levels, but what you don't want to see is the daily active addresses for it. Let's look at the last 6 months. Just zoom in a bit. Yeah, so this is what I wanted to show you. What you don't want to see is this sort of decoupling or declining in the amount of daily active addresses with Ren, because usually if the this amount of active addresses starts to decline back to or revert back to its pre-pump levels, and the price tries to make another push upward, it usually lacks fundamental support, as you've seen here, here as well, and then here as well. We kind of it went along with the decline. But for now, as long as we're around these massive levels of engagement with the network, that's pretty good. Pretty good to know. Let's just quickly look at its social sentiment. I'm curious because I've seen a lot of bullishness around Ren in the past couple of weeks. Ren. Let's look from, I think, 4th. Yeah, there we go. Because if it's quite bullish, then that should not necessarily be a good signal for its like prolonged price rally. If it's kind of gone down to ground, yeah, it has. Okay, so this is the last time that I've checked Ren. It was still very kind of bullish in terms of its sentiment, and you can see that these bullish territories once again kind of correlate with corrections, but we've kind of gone back down. After a few days of consolidation, we've gone back down to just a general, currently like almost a neutral sentiment, which should be good. You don't want the hype to be too high and the crowd to kind of FOMO in a lot into a coin, because then it's when whales usually start to dump on the crowd. So
Yeah,
now,
and it's interesting to see how much the crowd got fooled there too, because you see that it had a huge drop off from a standard deviation of about +2 all the way down to like plus 0.5 when the top looked really obvious.
yeah,
And oftentimes when the crowd has a consensus about the top being in, then the top is not in. So because they all sort of said, all right, I'm going to profit take here, the people on the inside, or the whales, or people with a little extra knowledge about the project, were able to push it even higher after the crowd kind of sold their bags here. And now the crowd is staying a little lower, even though it's still positive slightly. They're
yeah.
staying low on it because they're doubting that final huge pump upwards.
Yeah, I think this is also just due to a couple of announcements that Ren made at the time. I think this is when
Mm-hmm.
they announced their WBTC Cafe and their integration with CurveFi and a couple of other projects. So there was definitely a lot of hype here, and now it's dying down, even though the price is rising. So this is a good signal. The amount of active addresses is an optimistic signal. I don't know. Like I said, in these types of environments, it's kind of fair game for all of the coins that are related to decentralized finance protocols and systems. I think they can pump higher. I'm not sure that they will. Like I said, keep an eye on this metric, keep an eye on the amount of activity on the network for Ren and the amount of Ren on exchanges, because if we see that start to rise, in particular the amount of Ren moving to centralized exchanges, then finally, this sell pressure could kind of be the last nail in the coffin. But for now, I would not be surprised if we saw it rise even further. Maybe a small correction just because of this huge move upward, like we saw here. But after that, yeah, so far the fundamental support for a rally is there, at least based on on-chain and social data. Okay.
Good stuff.
I think we're done for today. Thank you guys, everyone, joining the call and just talking to us. Thank you all for joining us. If you want to continue this conversation on our Discord, the link is going to be in the description of this video. I will talk to all of you in 7 days. Be sure to check out the previous video that we published just yesterday about the Plus token move on Ethereum. It goes into more detail than I went into today. And we're going to be publishing a few more YouTube videos in the meantime. But until the next week's call, thank you all for joining us, and I'll talk